Hello, everybody. So, today I want to make a quick story about the inevitable Fed pivot that is coming. There is a lot of scare right now on the market everywhere. Stocks are down 3% against today because Jay Powell announced that he was going to keep raising interest rates. The Fed funds rate could be at 5% by year end. Jay Powell said that he would have no problem raising rates too high and would rather overdo it than underdo it. And if he overdoes it, he's okay with pivoting and lowering interest rates really quickly because it is something that he can do. I do believe that it is inevitable that the Fed will pivot. They have no choice. Hence this quick story. So, what's been happening for the past 11 months? Well, for the past 11 months, almost 12 months, stocks have been way down. Very unusual, but bonds have been way down and arguably for many bonds more down than stocks, which is not the way it's supposed to be. And real estate is going to be down. We haven't seen much in real estate, but it's going to be down. This is happening because investors, when rates go up, investors have alternatives. They have short-term horizons and they keep getting higher short-term horizon because you can get 5% risk-free, or at least supposedly risk-free. That is what traditional finance considers these rates to be risk-free, but they are not risk-free. Let me walk you through the insane consequences and the pickle that we are in and why a pivot is inevitable while printing will resume like never before and why a debasement is inevitable. First level consequences, all of the assets are down by a lot. What does it mean when assets are down? Well, when assets are down, companies do lay off. Shareholders have tremendous pressures on companies and there's tremendous amounts of layoff. People spend way less. If you're a retiree or even if you're a worker and you see your 401k way down, you're going to spend way less, which in turn also leads to layoffs because the economy is not growing very fast. Zombie companies go bankrupt. How many zombie companies are there out there? Is it 1,000? Is it 2,000? How many? Tremendous amount of zombie companies. They go bankrupt. You know why they go bankrupt? Because zombie companies have a lot of debt and they have to roll over their debt. And sometimes very high interest rate is just enough. It is the tipping point. It is just enough for you to declare bankruptcy just because you have to roll over a few $billions of debt. So many companies are going to go bankrupt. This is starting. And you get wipeouts of all sorts and all kinds. We've seen this in the pension system in the United Kingdom. You're going to see this at a lot of financial institutions, a lot of firms. You see this at the level of households, people who are over leveraged, their costs go up, they can't pay, you get wiped out. That's second level consequences. And what are the third level consequences? Well, the third level consequences are tax revenues are way down. As they say, like a garden variety recession is 20% down in tax revenue. That's about $1 trillion. I don't think this is going to be garden variety because stocks and bonds are down both at the same time, and we're about to get real estate down. All three major asset classes are way down. People are not going to have capital gains anymore. This is pretty bad. And what happens when you have things like layoffs, when you have things like entire companies going bankrupt, when you have less spending? What happens? Well, entitlements are way up. Additionally, entitlements are way up right now because just about everything is indexed on inflation, and inflation numbers are temporarily high because inflation does not look at the bigger issue, which is deflation, which is every cost is going to go down because we have technology that is insane and that is driving costs down. But inflation is making entitlements, is making salaries go up. So what will happen to the deficit? Do we really believe the numbers that the government put out of perhaps about only a trillion or just under a trillion in deficit this year? Do we really believe that? There's no way. There's absolutely no way. What will happen to the deficit? Well, of course, 20%, I would argue maybe more than 20% will be down. Because what? Look at inflation. Look at what's happening with inflation. So not only people make less money, but also they've increased tax brackets by close to 10%. They've increased the standard deduction. I think most people taxes are going to go way down next year when it's tax time, right? They've increased the tax brackets, okay? And people are smart. Investors are smart. That's how they got their money in the first place. Like, think about how many people right now are selling their losers and booking these losses that they can later offset against future gains. There will be a very, very, very lasting impact to tax revenue from these assets being sold down. I'm talking about world-class companies like Facebook. You may remember my rant about Facebook being down 70%. It doesn't happen for companies this big. Netflix was another one. It's like tremendous amounts of people are going to sell stocks and they're going to have losses that they're going to book. And they're entering into better positions, different positions. So this is the tax issue. The taxes are going to be down. What happens to spending? Well, inflation's adjustments are going to be everywhere. Salaries of government workers, they're going to get raises that's equivalent to inflation because prices are temporarily up and nobody's willing to withstand temporary costs up because we don't understand exponentiality. We don't understand that prices, technologies are getting exponentially better. And even though we may see prices up now, the bigger problem in the future is deflation, not inflation. So we have these issues where salaries are going up and salaries only go up. You can't lower the salary of workers. People get very upset when you do that. So this is structural. There's going to be structural costs. You can't lower Social Security. They increased Social Security payments, COLA, by almost 9%. You can't ever lower that, even with deflation, because we work in an assumption of inflation. So mandatory spending, or what I call mandatory spending, is going up. It's going up. Social Security is running out ever faster. Remember, Social Security is only invested in treasuries. Social Security is only invested in bonds. So with what happened to the value of bonds, poor Social Security is running out of money ever faster. So I would say forget about Social Security running out of money in the 2030s. You're going to run out of money, late 2020s, perhaps even mid 2020s. And so who's going to pay the pensions? Well, perhaps it's the government, perhaps it's the deficit. So what do you think is the direction of a deficit going forward? And then lastly, discretionary spending. So you would think at least the government would not do discretionary spending, but they do. We've had the student loan cancellations. We've had the hilariously named Inflation Reduction Act. And what I find when I watch the news is like the government spends deca billions every other day. Watch the news every other day. The US government spends deca billions. I want this proof. As of this morning, they've announced $13 billion in energy subsidies for low-income families. $13 billion. It's as though a deca billion, 10 billion, it's as though it meant nothing anymore. Watch the news every other day. The government spends $10 billion. Well, at this rate, that's 1 trillion, 1 trillion and a half, 2 trillions extra. So what's going to happen? Because the government is not earning that money, right? They're not raising it in the form of taxes. They're just not doing that. So what's going to happen, right? What is the deficit going to be in 2023 and then even after, 2024, 2025? What is the deficit going to be? Is it going to be 2 trillion, 3 trillion, 5 trillion, 10 trillion? What is it going to be? Well, it's going to be bigger than the COVID deficits because the spending continues. And thus, what happens when the treasury has to finance that debt and we have a deficit? Well, the treasury issues treasury bonds. And who is the main buyer of those bonds? Who has been the main buyer of those bonds? It has been the Fed over the past few years, and it will continue to ever more be the Fed as the buyer of those bonds, as foreign nations are even more hurt than the US. And foreign nations right now, they are selling bonds to prop up their currencies. They're not buying bonds. Most of these bonds are going to have to be bought by the Fed. And what happens when the Fed prints base money? You saw what happened here in 2020, a stark increase. What if we have in 2023, 2024, 2025 other stark increases like that to finance the deficit? What's going to happen to the denominator? Well, the denominator is going to increase so fast, so fast, that asset prices are going to be through the roof. Because if you double the amount of money in the system, you have twice as many dollars, your asset prices double. That is why, for example, real estate or the S&P 500 closely tracks M2 monetary mass. So I do believe it is inevitable when they will print again. And when they print again, asset prices will go up like crazy because this play is all about the denominator. They can only print about 1% more houses each year. And right now, we're not even close to that. Right now, we're not printing any homes right now. And by printing homes, I mean we're not building any homes right now. So the supply of homes is just about the same. But the supply of dollars may go up 30%, 15%. So of course your homes are going to go up in value because homes are just as desirable as they were in the past. Same for stocks. Companies are buying back their stocks if they can. Sure, companies print stock sometimes, but I bet you they don't print stock. They don't issue new shares nearly as fast as what the US dollar is issued, as the rate of which the US dollar is issued. You know, Bitcoin supply is fixed. It also increases at a very, very, very slow rate. And eventually it will be fixed at 21 million. So these are all assets, houses, stocks, and Bitcoin that will not grow nearly as fast as the denominator, nearly as fast as the growth of the US dollar. And so that is why I do believe the Fed is bluffing. This is obviously not investment advice, but we are lucky because asset prices are still on sale and people still have tremendous short horizons. And so we'll see how long they remain on sale. But I would say don't panic. There is no reason to panic. And so none of this is investment advice. Thank you for watching my video. But this, to me, there is no way that they don't pivot. Don't forget to like and subscribe. Thank you.